You're now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. And today I'm joined again by Lobo Tiggre, the independent speculator himself. How you doing today?
Great. Happy to be back on the show with you.
Yes, we're in 2025.
By the way, sorry, let me step, think, act, prosper. I like your tagline. Like, that's not just a tagline. That's exactly right. That is, ideas have consequences. Thought leads to action. So correct, clear thought leads to useful, constructive action. And in the financial sense, that means making money. So I really like the way you frame that. If I haven't said that before, by the way, so
no, you haven't. I mean, I had come up with the kind of tagline, and then I was thinking about it because when I was going through my journey of, financial freedom and really learning, it was like, okay, like I have a lot of knowledge, but if I don't act on that knowledge, then oftentimes, I've been in situations where I've been knowledgeable on how to build wealth or how to budget, and then if you don't follow the budget, right, then you end up not prospering, or whatnot. So it's just really simple. Like, okay, we're presented with information from professionals that come onto the show. That gives us an opportunity to think, do our due diligence as well. That's part of that thinking process, thinking about what you're going to share today, as well as any other guests, and then be able to, make the actions based on our thought process and whatnot. So then hopefully we prosper in the end. So that's the goal. Yep. So you had so we're in 2025. So let's start there. What's your general outlook on this year? We got Trump administration coming in next week. There was a huge market move based off the election results. That move has cooled down significantly, but he starts office next week, and so just kind of want to get your outlook on this year and what this could look like.
Yeah, with the caveat that I'm a due diligence guy, right? I used to joke that I was the Mexican knockoff Doug Casey. Doug Casey would send me into these old colonial tunnels to kick the rocks so he wouldn't hit his head. But you kind of have to think about macro because everything you hear on the mainstream media is, if not wrong, is usually misleading or incomplete. So you have to, in self-defense, think about these things. So look, Trump fans hate it when I say anything other than Trump is going to be great. I don't own a MAGA hat. I'm sorry. But bear with me for a second, Trump fans. I love the idea of cutting taxes. I love the idea of deregulating. I love the idea of Vivek and Elon getting in there and taking Milei's chainsaw to the swamp in Washington. I know I'm mixing metaphors horribly. Chainsaw wouldn't work real well on a swamp, would it? But you know what I mean, right? I'd love to see all this stuff. I would love to see Trump put the U.S. on a sound fiscal basis, poised for real, healthy growth, not government stimulated pseudo cancerous growth. I'd love to see all that happen. But even if that does happen, like if that's the best case scenario, the amount of pain we have to go through first, the amount of errors and misguided policies and misallocated capital that would have to be liquidated in order to achieve that would be huge. I mean, that would absolutely be a wrecking ball to half the economy that's built on all this garbage. You can't make that transition without, things breaking. So what I'm saying here is, again, hear me, I'm not saying it's a bad idea for Trump to cut regulations or taxes, but I am saying that if you cut the taxes and you don't cut the spending, despite, Elon's best recommendations, right, you're going to blow out the deficit. And that has consequences that we as commodities investors and speculators know all too well. So the answer to the question for 2025, it's going to sound like I'm beating up on Trump, but that's not my point. I'm not trying to be pro or anti-Trump. I'm trying to have my eyes open. Trump is an agent of change. Change markets don't like, right? And, change is the nice way of putting it. You could also say agent of chaos. And maybe all this, there's bluster and all this stuff, and maybe the tariffs won't be as bad as people fear. But we know from Trump 1.0 that he can and will do extreme things. Like, remember when the COVID-19 breakout started and Trump just shut down travel from China, and everybody's like, "Oh, you can't do that," but he did, right? So who knows what Trump might just unilaterally do on day one or week one or month one. So the one sure thing here is, brace for volatility, increase volatility, brace for chaos. And where do you want to go from there?
Mm-hmm. Yeah, 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 for sure. So we have these dynamics of, I mean, obviously cutting taxes without cutting spending is problematic because spending is very excessive, and where's the money coming from, right? So it's
Money
like
printer go burr.
and so yeah, I mean, and then you have the aspect of now you have whether someone is Republican, Democrat, whatever. Like I'm probably more apolitical, more libertarian than anything, but you have the aspect of both parties adopting things out of each other's playbook. And I was listening to David Stockman from it was Rick Rule's recommendation when he was in the Reagan administration. And I was listening to him and how he was sharing how uh, traditional conservative, fiscal conservative Republicans, and I guess there are fiscal conservative Democrats as well that would say like, hey, we don't need to be spending this much money. But then you have Trump's administration, which a lot of it, he did have the popular vote where many people that are hurting are like, hey, we're tired of inflation
All
and
right, let me
everything.
jump in on
Yeah, yeah,
just to agree with something you said that I think is
yeah,
really important and people
yeah,
should
yeah.
remember. This is There is a change in American politics that is real and material, and it impacts our investment decisions. And you just put your finger on it. When you talked about the Reagan era, and there were fiscally conservative Democrats, like they were real, they aligned, their values aligned with the Democrats, but they didn't want to just spend nilly-willy. And they could get together with the fiscal conservatives and the people who cared about, there was a balanced budget amendment movement at some point because people from
Mhm.
both parties could see the importance of that. I mean, the debt ceiling, it's a joke that, it's a ceiling that keeps moving. There's no ceiling at all, but it was put there by people from both sides who understood, at least conceptually, right? The fiscal responsibility is a valuable thing. I don't think that exists anymore. The kind of bipartisan that is necessary to move something that people from different, reasonable people from different walks of life can agree on something and agree to move that forward. I don't think that happens. And I honestly, to be fair, I think part of this is Trump. Like when the Democrats agreed with the Republicans in Congress to advance a border security, I don't remember what they called the bill that they had, but Democrats got on board to try to do something about the southern border in the U.S. And Trump said, no, we don't want this to happen until I'm elected, right? And they shot down this bill that gave the Republicans a lot of the things they wanted. The Democrats gave the Republicans many of their key demands, and that got shot down for political reasons. So the bipartisanship that could have put in immigration reform last year or the year before got shot down. And so I think the Democrats are going to remember that. So even if the Republicans come up with something they can agree with, this makes sense, this is common sense, this is fiscally responsible, I can see them saying, no, screw that. You guys shot down our compromise bill. We're not compromising with you on anything. So sorry, but I just think it would be very naive to think right now that the Democrats are going to cooperate with Republicans on anything. They're gonna seek to blame them for everything. And so and 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 sorry, with Vivek and Elon, right? They have no actual power. They can only make recommendations. And it would take bipartisanship to do anything with those recommendations, which is why I'm so skeptical that they'll get anything done.
Mhm.
Sorry, I don't want to monopolize the
No,
conversation.
no,
I just
no,
think this
no.
is a really important point. It's not like it used to be. The division is worse than I've ever seen in my life, really.
Yeah, yeah. Agreed. And I'm pretty new to politics, but from learning history and seeing what's happening now, like I come to that same consensus. So one thing that I've noticed like this time around is that the issue of fiscal spending, we have the Republican Party, Donald Trump, they're like, hey, we're not going to cut Social Security. We're not going to raise the age, any of those things. And usually like entitlements and something, those are things that have like seem to always be on the table for like, okay, maybe we stop doing cost of living adjustments or whatever the case may be. But to ultimately get the some fiscal sanity, happening, because when we look at the amount of spending, I mean, Social Security is the biggest one. Then we
can't touch that, and we're going to spend more on the military, right? And the big one that nobody likes to talk about is the interest payments. Like, we're spending more on interest payments in the U.S. than on the military, and rates are going up, not down. So it a really interesting, push comes to shove, rock hard place right now, like right now, not sometime in the future, right now, is we have seen a rebound in inflation. The Fed says inflation's going down to 2%. And if it doesn't, according to them, inflation is job one, right? They should raise rates. If inflation goes back up again, they should raise rates. But at the time where the U.S. budget and the spending on debt payments is going like this, pulling a hockey stick, if they raise rates, even if Elon and Vivek do cut $2 trillion out of the deficit, the interest payments could swamp that. So it's really the rock in the hard place is a real 2025 issue.
Yeah, and I was thinking about that too. I mean, because obviously that the amount we're spending on interest it exceeds $1 trillion. That money could go elsewhere or whatever. But it's so I'm kind of wondering, like, okay, we have the rock meets the hard place. Is the government, it's this idea of fiscal dominance where the government is going to say, like, hey, we need you to cut rates. And obviously Trump wants lower rates and lower taxes. And the Fed is supposed to be an independent entity, right? And I just think that
the rock hard place, and honestly, it could go either way. But my gut, for what it's worth, again, I'm just a due diligence guy. I kick rocks for a living, but my feeling is that if past is prologue, like our friend Rick Rule likes to say, it's always the dollar gets thrown under the bus. When push comes to shove, Powell isn't going to say, "Oh, Trump called me, so I'm changing my mind." He's never going to say that. He's going to say, "Oh, we see systemic risk, so yes, fighting inflation is important, but due to this systemic risk, we're going to have to, cut rates anyway. Even if inflation is going up, we're going to cut rates." When that happens, I think that's when you start seeing Fed credibility really go out the window. I think that's when the bond vigilantes really come riding back into town, six guns blazing. And, it'll be interesting in the Chinese sense of the word, my friend.
Yeah, for sure. So how does one invest in these kind of like circumstances? So we do see that the fiscal spending has prevented like the hard landing that many people were anticipating, including myself,
including me. Gotta say, including me.
We did have some sense of a hard landing, but it didn't last very long. I mean, I think it was fall of 2022, and we saw some drawdowns in 2023, but I was expecting to see more pain, but then now we have these two economies. You have those who are able to benefit under the current circumstances, whether they're receiving entitlement payments or let's say they don't have debt. So, the savers are kind of being rewarded in a way. And then you have those who are struggling, that aren't receiving entitlements, who are paying super high interest on, and you have this dynamic of where the Fed cut the short end of the curve, but it's not.
But the long end is headed towards 5% already.
Yeah, it's not impacting mortgages or any of that. And so it just seems like this two economy dynamic is still here to stay.
Yeah, and there's a really important issue, again, in what you've said, the way you frame this, the K-shaped recovery, if you will, or the two economies, Wall Street versus Main Street. There's a lot of different ways to frame this, but the key point is that, there's lies, there's damn lies, and there's statistics, right? And then I would add a fourth one, government statistics takes it to a whole nother level of falsehood and unreliability. But if you publish a national average and you say, well, the average American's doing fine, which is what the current administration for a few more days was doing all the way through the election. Like, why are people complaining? Why, the Biden economy is the best ever. And if you look at these average statistics, even if you can't trust the statistics, that's not the point. The point is they're averages. So the guys buying Lambos on Wall Street because they bet on Nvidia are going into the same average as the guys who are charging up their credit cards to buy groceries. And you average that out, hey, everything's fine. But it's not fine. The guys charging up their credit cards to buy groceries, that's not fine. And guess what? They voted, right? So to get this back to the world of investments, though, we don't want to beat up too much on economists because we could do that all day. Other than, remember, just be skeptical. Where the rubber really hits the road here, what all of this says is A, volatility, B, this is an inflationary environment. We're looking at higher inflation ahead. It seems like all roads point towards inflation. And yes, I know the Rosenbergs and so on, they're still pointing towards deflationary potential. But I think Lynn Alden was right. The fiscal dominance was right. My mistake was thinking that we would get the recession first, or the undeniable recession first, and then the money helicopters would fly. But it turns out the money helicopters never stopped flying, not since COVID. We've been running multi-trillion-dollar deficits, wartime levels of deficit spending, even after the lockdowns ended, even after think about it. We're running multi-trillion-dollar deficits right now while the administration is trying to tell us that we have the greatest economy ever. How can you square that peg in the round? That makes no sense. If we have the greatest economy ever, we should be running surpluses, not multi-trillion-dollar deficits, right? So this is highly inflationary even before Trump steps into the bear trap. And that means real stuff. Whatever statistics get reported, whatever CPI, PCE, whatever they say, the real world, on Main Street, real stuff is going to cost more. And sorry, one more variable here to throw in is the powers that be, I believe, will point towards the Forex situation, the point at the DXY, the dollar as it compares to other currencies. And right now we're looking at dollar strength. Wow, the dollar's so strong, everybody's saying. Yeah, but it's not actual strength. It's not like your dollars are buying more in the grocery store today than they were last month or last year. It's that your dollars are buying more than your euros are, or your yen, or your yuan. So winning the race to debase or failing to lose it, that doesn't actually make your currency more valuable. And so I know that we've kind of opened up a Pandora's box of different discussions here, but this is, I think, the ultimate takeaway for everything we've been talking about. On the stage of the real world, on Main Street in the real world, real stuff is going to get more expensive in any currency. Whoever's winning the race to debase doesn't matter. Don't get distracted by that. Don't be fooled by the so-called strong dollar. It's only strong compared to some other meaningless piece of paper, not in the real world. And I think that's part of the message that we're hearing loud and clear from gold right now. Really, with the strong dollar and the Fed, the inflation stickiness and all the stuff we had, gold should be taking it on the chin. All the gains we saw in 2024 from gold should have gone into reverse by now, and they're not. And it's okay. You can say it's central banks from China, whatever, buying, that's part of it, but it's not just that. I believe that the dollar is signaling that gold is signaling BS on this dollar strength story. And I think this is the takeaway for people. And I'm not just, the takeaway isn't just buy gold, dear audience. The takeaway is reality versus the numbers, and look at the real world. And I think gold is just one barometer of that. Look at real estate prices. Even with higher rates and people having trouble getting mortgages and things, the real world is telling us something, and I think we should pay attention to it. And as commodities investors, this is actually good news.
Yeah. So diving into gold more, which many people know, like some of the the central bank buying, obviously debt and deficit spending and national debt and such. And so there's many different reasons, like tailwinds for gold. And I thought I was going to see, which I had on the charts, that gold would hit 2,700. It did. And then it cooled off. And I was really surprised. I had looked at the price. I tend to not even look at the price sometimes because it's just insurance for me. But I went and looked at the price measured in dollars the other day, and it was like 1680 or 2680. And so I was just like, oh, wow, this is like still holding up really strong. I was really not necessarily surprised, but I think it was more of like, oh, okay, it just cooled off a little bit. But I mean, it seems like it's consolidating for another move up at some point.
Yeah, so there's some debate here. There are some technicians that are saying, if you look at gold as this cup and handle, and we've now gone up from the cup and handle, and it's like it's doubled or something from the bottom, and that signals the end of the cup and handle breakout. I'm not a TA, so I'm sorry if I'm not expressing this right. Anybody in the audience who says, no, you said it wrong. I'm not a TA. But the idea is there, right? There are people who are saying, this is it. Gold's risen as high as it should. I mean, it might fluctuate a little bit higher, but the pain trade for gold now here is to bet that it'll keep going higher because it's already had its run. There are people who are making this case right now. And with gold near nominal all-time highs, it's that's you can't just ignore that argument. It's not like gold is at a 10-year low or something. It's literally at all-time highs in most currencies and is close to it in the dollar. So it's hard to sit here and say, oh yeah, gold's super cheap, it's going to the moon from here, when it's already gone up. It's pulled a hockey stick, right? So I get that. But I'm not a TA. I'm a fundamentalist, if you will. If I had a Bible here, I'd thump it. And, I just articulated the situation like in reality. Never mind all the numbers coming out of Washington. Reality is such that I'm just very, very bullish on gold. It's hard for me to see, other than a technical argument, why gold would go down. I mean, let's say the war in the Middle East, they get the ceasefire and that cools down. I don't think that does anything for the other war. And Trump says he can solve it in 24 hours. I think that's a little optimistic. Right? The geopolitical stage is still fraught. And then there's still the whole issue with Taiwan that hasn't even started up. And by the way, I think if Trump defunds Ukraine and forces them to knuckle under to Russia, I think that's like telling Xi over in China, hey, we're not going to defend Taiwan, so help yourself. I don't know. I'm not a military expert or whatever. I just see lots of danger here. I don't see the world suddenly turning into a safe place. So there's the geopolitical risk. And that completely aside, we have the central bank buying that you were talking about. And the reasons for that don't go away. Even if there is peace, even if the fighting stops, right? That doesn't make everybody decide, oh, well, we can trust Washington to, be able to pinch off our money flows. So I think that change, the weaponization of the dollar, I think that's irreversible. And that's very bullish for gold. The the world is just sort of woken up. And by the way, inflation hasn't gone away. And the robotic traders on the COMEX still sell gold idiotically when inflation prints go up because they think the Fed is going to tighten and higher rates are bad for gold. This old logic. But this has obviously not been true. I mean, here we are, 2024, and where is gold versus where it was before this breakout in inflation? So that whole thing is wrong. And I think a lot of people, ordinary people, institutions, investors in the West, never mind around the world where they never didn't love gold, right? All of this is extremely supportive of gold. And where is the big seller going to come from? Like, who is going to dump 1,000 tons of gold on the market? It's not going to be China. I mean, I just don't see it. So who knows? Maybe there's something I don't see and it comes and it whacks gold. I don't see a lot of downside here. And sorry, one more thing that you mentioned also. Remember, it's one thing to own gold for safety as savings. And it's another thing to speculate on the gold dollar exchange rate. And for that, bullion is not the vehicle. Bullion that I can hold in my hand, that's my insurance policy. That's my savings. That's my rainy day fund. That's not a speculation. It's not even an investment. It's cash savings in my view. But the stocks, if I'm right, then the stocks should provide leverage to the underlying metal. And that's potentially a way to make money. And, that worked out for me in 2024. We'll see about 2025.
Mm-hmm. Yeah, and I think another thing to even add on to this conversation is that, even if like when Trump was elected, like we did see like gold fall a little bit. Um, but that didn't change like that him winning the presidency didn't change the dynamics that you mentioned, but
Yeah,
also
right.
like,
Yes, nothing
even
changed.
if we get like some type of fiscal, fiscal responsibility or responsible fiscal policy or anything of that nature, like it's going to take decades of consistent compounding behavior by
Yes.
politicians uh to even impact, like for gold to fall. Like you have to see like, okay, we're cutting entitlements, we're slashing defense spending, we're going to balance the budget, we need to get our trade surplus. Like it's
Yeah,
so.
I mean, the list. Like, if I want to steel man the argument, the contra gold case, I mean, gold is, even if it doesn't correlate with CPI, that's a mistake because it tends to lead in other factors. But gold is history's greatest inflation hedge, right? It's the sort of thing that in the medieval times you buried a purse of gold under the fence, right? And after the war, you could come back and you had savings there, right? That what in the stage of the world is going to change that? I mean, Bitcoin doesn't change that, by the way. Like, even if you 100% believe in cryptos and Bitcoin, gold still has a role to play, especially on days when the internet doesn't work, right? Right. So that just doesn't go away. And for the case for gold to really go down, we would need there to be like a vast reduction in safe haven demand. And what of the possibilities in the world? What choices would Putin and Xi and Trump and others have to make for the world to just feel like a safe place where we don't need a safe haven? I don't I don't see that as even in the cards almost, right? We'd also have to have all these other central banks decide it's okay for Washington to control our money, right? And how is that going to happen? I just that defies belief that could even be possible, let alone happen. So yeah, I just all of that having been said, you haven't asked me yet, but gold is actually not my best bet for 2025. I like gold, I like silver, I like uranium a lot still, but I actually think copper is poised to do better. Again, with our theme for earlier, talking about the macro, it's real, it's a commodity, it's a physical thing. You can hold it in your hand. It's absolutely necessary, not just for electric cars or AI or any of the latest fads. It's a fundamental, essential, critical mineral for all of civilization. We call it Dr. Copper for a reason. And unlike oil, copper supply is constrained, demand is going up. I'm actually very bullish on copper this year. So I'm not just trying to sound like, oh, it's all gold, all gold. Anything real, anything of real value in the real world is of interest to me. And then I want to look at, where's my most compelling value proposition here? And as much as I like gold, it's trading near all-time nominal highs, whereas copper is way off of nominal all-time highs. We need like a 60 to 70% increase in copper prices to actually hit another high. So that's much easier to see happening than, gold doubling from here.
Mm-hmm. Yeah, definitely. So this is actually a good segue because I had recently went on the uh, it was pretty much a forum that was put on, and Rick Rule and Byron King and a few others were putting it on, and they were talking about investing in Argentina. And a lot of the Argentinian stocks have doubled, tripled. I mean, you look at the ARGT ETF that moved up significantly since Javier Milei has been elected. And Byron King had mentioned a company, McEwen Mining, which they have copper deposits and such, and they do some work in Argentina as well. And so what kind of opportunities are there in Argentina for metals like copper or any other critical minerals that we need?
Yeah, this is a really interesting topic. As it happens, I'm headed down to Argentina next month for a due diligence trip. And it reminds me of earlier in my career. I mean, 20 years ago, Argentina was also just coming through a change in government. They had liberalized the mining code. They made it much more flexible. They federalized the permitting so that the more pro mining regions could permit without being held up by the city people in Buenos Aires, excuse me. And a lot of people were going down there. It wasn't just McEwen, though he was one of the early ones down there. There were a lot of people who went, they look around and, well, what Argentina is a huge country. It looks small if you look at one of these standard square maps of the world. It only looks small though because it's so close to the South Pole that these flat maps are distorted of a globe. They're not an accurate representation. Argentina is a huge country, and in that mountainous terrain, those deposits on the Cordillera with Chile and so on, some of those biggest, richest copper and gold deposits in the world along those same mountains, that same geology extends all the way through this huge country. And I remember 20 years ago, people like that going, I mean, Ron Peratt from AUX fame, other people looking at Argentina, it's like, this really reminds me of Nevada, but like 100 years ago. It's untouched almost. It's like having this whole new Nevada to explore for all these deposits, with very little done there so far. And so from a geological perspective, it's huge. It's largely untapped. There's an enormous amount of wealth there that can be tapped in. Unfortunately, they've had criminally kleptocratic governments for so much of the time. It became completely uninvestable. 20 years ago, I was down there kicking rocks. I've been to Argentina many times. I've looked at a bunch of different projects. And then it just became uninvestable and I left. I didn't have any. So now the pendulum has swung in the other direction. I think it's very exciting. And we'll see. There's I was more concerned earlier on, people who bought into Argentina plays just when Milei won. That was a very risky move. I mean, who knew whether he would be able to pull off anything, or even if he did start, whether he'd get shot? Like, it's serious business. What he's doing down there is upsetting a lot of powerful interest, and the unions hate him. I don't mean to be melodramatic, but when he first went in, I was really worried that if he'd either turn out to be one of these guys who's all talk and no action and nothing would happen, or if he was real and he did try to put into action what he talked about, he'd get killed. Turns out neither of those things have been true. He's tamed inflation in Argentina, of all places. Like, wow. So I think that's fantastic. And we have 3 more years of Milei. Maybe the pain he administers makes it so that he doesn't get elected again, or maybe he succeeds so wildly that he does. I don't know. But however that turns out, we have 3 more years of Milei. That's long enough for an explorer to make a discovery, or for a developer that's got a shovel-ready mind to build it, or for a producer to ramp up production if they've got the goods, right, and deliver added value to the market. So yeah, this makes Argentina one of the most exciting places in the world to consider. And that's why I'm headed down there myself to, kick rocks as I do. That said, stock selection still matters. I would not just buy Argentina because of Milei. And we have seen, if one of the main lessons of 2024 was, at least so far in this market, a rising tide does not lift all ships. I mean, a lot of people are counting on record prices or something to make every Tom, Dick, and Harry stock out there go up. That's not what we've seen so far this time. So, caveat emptor, buyer beware. And I do think this, for now, we are still very much in a stock picker's market. And until that changes, That's the way to play it.
Hmm. Would you consider like investing in Argentina more? Well, I guess I don't know if we have to call it investing or speculating, but like, do you consider that more of like, I mean, obviously, if you do your due diligence, like then you're like, okay, I can make an investment. But some people may are speculating on like Malay and such, and then there's this dynamic as well with we do see a shift around in countries all around the world where more conservative leaders are
Yeah, you're
getting
obviously
elected.
not mainstream media. You would call them far right.
Yeah, 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 definitely. They're getting elected, and then Malay has expressed like an admiration for Donald Trump, and so I'm kind of wondering like if that relationship between, I don't know what the current relationship is like between the U.S. and Argentina, but if that's strengthened, if that could
Yeah.
even,
So there's
yeah,
a lot of interesting potential for there. But remember, I'm a rock kicker. I'm a due
yeah,
diligence
yeah,
guy. So you ask me to think about global geopolitics and the trend here, but let's not go too far down that rabbit hole. But I will point out we have seen an uptick in inflation globally. Like we had this big wave, it came off, but around the world, we're seeing inflation rebound. And we're seeing so-called far right. If you're it's pretty funny actually. You get openly libertarian people who hate big government, and they're being called far right by the liberal media. But that's not a coincidence, right? To see the stickiness and rebound in inflation, and then to see people who talk about fiscal responsibility, whatever else they say, right? To see them get voted in, that's not surprising unless you have media blinders on. So there is a global trend there. How does it play out? What are the results? I don't know. I'd like to believe that this could lead to some very good things. Um, here, here's one way I've put it. The problem with economics, or there are many, but one of the key problems with economics as a science is that you can't do experiments. Like a real science, you have to be able to have a hypothesis, test it, subject it to failure. And if it survives failure, this is how the scientific process works, right? You actually don't ever prove anything. You just test and test and test. And the more something survives disproof, the more weight you can put on that hypothesis. You can't do that with economics because you can't really test an entire population. Okay, population, we're going to cut your income in half to see what happens and see if the laws of supply and demand work the way we think they will. You can't do that. But history has brought us a sort of test of economics. In this last cycle, we had Milei win in Argentina, and you had Scheinbaum win in Mexico. Both are large countries, resource rich, with oil, gas, copper, gold, and also agriculturally rich, Spanish speaking, in some ways similar cultures. So they're not identical. No two countries are. But hear what I'm saying. We have two roughly comparable countries, and one went supposedly far right, and one just took a hard left turn. Let's compare how they do over the next few years. I think any honest economist ought to be able to look at this experiment that history has just handed us and objectively look at the results. And if one country's economy, grows in a healthier way and the other one doesn't, then I think we should, or anybody who's serious about this should fess up to that. And that would include me, by the way. I'm not an economist. I'm a rock kicker. But if somehow over the next couple of years, Mexico's economy really grows and is more robust and healthy and it's booming, and economy in Argentina is going down the toilet, then I will say, hey, you know what? There's something clearly not right with my theories and my expectations here. I will fess up to that. And I challenge any leftist economist out there to fess up to it if it goes the other way.
yeah, yeah, yeah. Thanks for sharing that. That is something to be interested in to keep an eye on. So another thing is we have, well, sticking with South America, like I was looking at some of the Brazilian companies, and I've been investing in some of their fintech, as well as I started buying Vale again. and Vale's just been plummeting. Like I was just like, wow. So I was kind of wondering, do you have a take on Brazilian equities at this point?
Yeah. So Brazil is interesting. I do, but it's not a very clear thumbs up or a thumbs down. I am hesitant to put my own money into Brazil, and it's not because they had a leftist government per se. I mean, their governments have all been more or less leaning leftist one way or the other. I mean, they had the supposedly, pro-business guy for a while, but he was ineffectual. Um, but even the leftist governments have been somewhat pragmatic, right? They haven't just said, okay, we're going to all weave baskets and we're not going to have any real businesses in this country at all, right? We're not going to shut down the mining. We're not going to shut down manufacturing. We're not going to shut anything down. They've been pretty pragmatic. So whatever the, left wing, right wing didn't really matter. What was really more important was, rule of law, physical safety. It's not good when your geologist gets kidnapped or your stuff gets stolen, right? all your diesel disappears from your mine camp and that sort of thing. It's not good when two different juniors are hawking the same properties at a PDAC, right? They both got a license, from some corrupt government official to the same, concession, that sort of thing. So this has been my concern with Brazil, is like, even if you find something, it's hard to tell if you're really going to be able to hold on to it. It's just a tricky jurisdiction. So in some ways this makes it Doug Casey's 7 or 8 P's of resource evaluation. People was always the first P. In a place like that, people becomes even more important. And by that, I mean, you need proven operators. You need people who've been there for decades. They clearly don't just know how to throw right parties for government officials or whatever, but they've done it before. Like, they've built mines before, and they don't just talk the talk. You have a track record where you can see, okay, these people know how to operate in Brazil and move things forward. So when there's something like that, and I like the project, then I can be interested.
Mm-hmm. Yeah, definitely. And then I just want to get your take on Canada. I know we're talking like geographics, and I know you do specific companies, but just looking at like geopolitical risk um, and things of that nature. I
Well, we
mean, right
talked
now,
about the
Canada.
world making a right turn. It'll be interesting to see what the next government of Canada looks like. I mean, Trudeau's out, and I guess there'll be some temporary placeholder until the next election, but the expectations are generally, my Canadian friends all think that we're going to have a more pro-business government as a reaction to this, hard left agenda that so many of the powers that be, in so many countries, try to ram down the people's throat. And there's just, too much, too quick, and there's been pushback. So it'll be interesting to see if we get a more, not just business friendly, but resource friendly government in Canada, which, I mean, think about it. It's Canada, for crying out loud. For Trudeau famously quoting, Rick quoting him, right, to say, oh, there's no business case for natural gas in Canada. Like, hello, people don't go to Canada to lie out on the beach, like Acapulco or something, or people don't go to Canada to collect. I mean, it's a resource rich country, and to say, well, screw the resources, we're not going to use that wealth, it's just crazy. So I could actually see, for all the negativity, and many even Canadian people who see Canada as uninvestable because they hate Trudeau so much, that sea change, if we get a Canadian Millet, we could see some very good things, because the deposits are there. You don't even have to bet on discovery. There are known deposits and already successful exploration plays that are just sort of stuck because of the difficulty in permitting and advancing and so on. So if that gets better, then I think you could have a relatively high reward for lower risk environment. But this is all an if thing. We need to see it first. Maybe it seems likely, we're hopeful, but hope is a dangerous thing to a disciplined speculator. I want to see it happening. I want to see a more pro-resource government out of Ottawa to support the provinces where you can move forward, and then it'll be interesting to see, what value propositions are on the table at the time.
Mm-hmm. Yeah, I mean, because a lot of the uranium companies that, I mean, Cameco and Next Gen, there's a lot of uranium companies in Canada, and I have some explorers in the Athabasca Basin, and you got Saskatchewan and everything. So it seems like this geopolitical dynamic, is significant there.
You've looked at the positive side, my friend, but there's also the negative side. Like one of the things we don't know is exactly what kind of tariffs is Trump thinking of. So if he slaps this tariff on Canada, is it like 100% everything across the board, including uranium, which they're making and we're not, right? In the U.S., like if it would be sane for, if you're going to do this, maybe to put the tariffs, sane is not the right word I'm looking for. It would seem more intelligent to go about this. Like, if you're going to do this, put the tariffs on manufactured goods. Like, if you want to support American jobs, then okay, put a tariff on Canadian cars so that, Americans get more jobs making cars, that sort of thing. But taxing Canadian uranium would be crazy. We're just not producing. I mean, we're just barely restarting uranium mines in the U.S. We're not producing the stuff. So, I mean, that would yeah, that would really be like cutting off your own lifeblood to do that. It would make no sense. And so we'll see. But Trump just got up there and said in that interview, we don't need anything from Canada. We we don't need Canada at all. And if that's, maybe you could say, it's just bluster. It's all art of the deal. It's all negotiating tactics. Yeah, hopefully that's all it is. But you never know. Remember, the one sure thing I said about 2025 was increased volatility.
Yeah, for sure, for sure. Well, Lobo, what are some things that investors should take away? I mean, obviously expecting volatility, and you mentioned copper being your top pick. Are there any other things that investors
Sure.
should consider?
Well, absolutely. Uranium's still on the table. Like when I say copper is my top pick, that doesn't mean I'm a uranium bear. I actually think uranium goes higher. And I think despite the delays and everything like that, we're going to see the better uranium companies delivering in 2025. So again, I wouldn't buy the whole basket, but for a stock picker, picks the right companies, I think you'll make money. Absent a Chernobyl scale event, I think you'll make money in the uranium space. I like it a lot. I think gold and silver do well in 2025. They're just, copper is relatively cheaper than either one of those. That's why I like copper better. It's not that I'm bullish on all three. Also remember that physical gold, bullion that you can hold in your hand, that's not a speculation. It's not an investment. That's savings. It's your insurance policy. It's a completely different critter. I also think that on the flip side, it pays to be very cautious about almost everything else. I mean, people are expecting, once the economy takes off again, for lithium and nickel and cobalt and oil and all kinds of things to go north. That may or may not happen. We'll have to see. So basically, monetary metals, gold and silver, very bullish. Uranium, because it marches to its own beat. Copper, for all the reasons we discussed before. Everything else, it's wait and see for me. Many other things could do well in 2025, but that's an if not when question. And I want to see, going back to our Rick Rule quote, forget about inevitable. I don't even want to hear about imminent. I want to see it happening now. When I see it happening now for nickel or graphite or whatever else it is, then that becomes investable to me, not before.
That's good. That's good. Well, you all a wealth of information given by Lobo Tiggre today. Where can people find some of the work you're doing? I mean, you're doing some amazing work at your site, and so you want to plug people to that?
Sure. Well, the easy plug is we have a free weekly newsletter. If you sign up for it, I promise we will not spam you. I can't promise you'll agree with everything I say, but I can promise you that you get one email per week. You can see how I think. It's free. It's the macro letter. It's the context for my investments. And then if you want to hire me via my publications to be your due diligence guy, I would just quickly say that we have a service called My Take. It's not like any other newsletter out there. There's no portfolio at all. It's more like Consumer Reports. We cover almost 1,000 companies now. I have a whole team, and it's a database where we update independent evaluations of resource companies. So if you've got questions about which stocks to pick or to sell, what to buy, sell, or hold, then my take can help you with your due diligence.
That's good. That's good. Well, I'll be sure to link to it in the description below. Be sure to go check out Lobo's website, and I'll also link to your X profile as well. So thank you for coming on again.
That's where the fun is. That's where the memes circulate.
Yep, for sure. All right. Appreciate you, Lobo.
All right. Take care.